Just tell us the breadth of companies that you analyze. Are we currently throwing everything out with the bathwater at the moment because we're worried about future growth, no matter who you are?
Yes, because as bond yields go up, bonds look more attractive as a substitute to equities. So we're getting net equity outflows into the bond market. That makes sense economically. And that's a higher level of the capital structure. So they have lower risk in case somebody does go bankrupt. And I think specifically as you get this advertising downdraft, advertising has 80% margins. So Google, specifically Google and Meta, or Alphabet and Meta, really are going to be under margin pressure if we go into a recession and if advertising demand gets worse.
Laura, in the context of multiples on some of the names that you cover, what's the biggest concern to the market right now? Is it this idea that rates will go higher in bigger increments, or are we starting to get more and more concerned about how deep a recession might come?
So the biggest concern is in a discounted cash flow, which is the academically rigorous way to value these companies. If you have a higher discount rate, any cash flow that comes from year 4 and future, like Amazon is making no money, Meta is having, really in a downdraft in its profit margins, those out years become much less valuable. And so what you care about a lot is current year cash flow and next year's cash flow. And on that score, Apple, $90 billion a year of cash flow, super safe, feels like a good place to hide, super liquid. Google still continues to have high free cash flow. We'd like them to cut costs faster, but a lot of their value is not past year 5, which in a rising interest rate environment, those past year 5 cash flows are really discounted harshly.
Let's dig in on actually the only name that you haven't underperformed on, and it's Meta. They are trying to talk up efficiency in particular. They are, of course, looking towards their 4 jobs that are on the line, Laura. But ultimately, I've looked at some of your decks on this company after their earnings. You said you'd like the word efficiency, but are they just rearranging, well, the chairs on the Titanic is one of the phrases you used.
True. I mean, I think the question we're asking is, does Meta have a terminal value in its core business? Because one of the data points we're reading is most of the layoffs the CEO, Mark Zuckerberg, is making sit in the core business of Meta that's being undermined by TikTok. Assuming TikTok doesn't get banned, the question we have is, in the core business that funds the metaverse, does he actually have a terminal value? Or does he just lose all his creators and all his users in the first world countries to TikTok instead, assuming it stays in business? I think that's a very real question for these network effect businesses that benefit from network effects on the way up, but get slaughtered by network effects like MySpace did on the way down.
Yes. Laura, how worried are you about brain drain? I find this really interesting. One source described this latest round of layoffs to me as more of a sledgehammer. If the 11,000 in November were done with a scalpel, this is a sledgehammer. And I wonder, what's the risk that they lose all of these smart people that are trying to drive this longer-term transition so they don't even get there?
Agree 100%. I think it's hard for morale to lay off people. I think what happens is, if you're not sure you're going to get laid off, your most talented people go and proactively look for another job and get hired away. So who you end up left with is the people who can't get the next job. So you end up with the people that are the worst of the bell curve, not the best, because the best people go somewhere else where their job security is intact.
Lastly, though, when you hear about actually other areas of focus, particularly for analysts at the moment, is saying one area that could perhaps be an upside potential is artificial intelligence. Are you buying that, Laura, particularly for some of these big companies that you monitor?
So it's a great question. So last year was the year of the metaverse. I think this year is going to be the year of AI. So the best question is, when we're sitting here a year from now in early 24, is anybody talking about AI, or have we moved on to something else? I think most of these big tech companies have been using machine learning for a long time to make their recommendations better, to sort their search pages. They've all been using machine learning. Sort of ChatGPT and generative AI is new to the consumer market, but a lot of these tech guys would say they've been using AI/machine learning for years. So I don't know whether AI is as big a deal for these large tech-driven companies as it is for the consumer, where suddenly there's a use case that's really exciting in both both pictures and in answers.